put it back together so that it makes sense for you. I'm Forbes Markets editor John Dovis. Well, one of the old sketches on Saturday Night Live that was always hilarious was the recurrent character played by John Belushi of the cranky Greek diner owner who would have no fries, only chips, and no Coke, Pepsi. Cheeseburger, cheeseburger, cheeseburger. There's John Belushi. There's the great cheeseburgers they serve. Dan Aykroyd here. Of course, this was modeled after a real-life tavern called the Billy Goat Tavern, Lower Michigan Avenue, right below the Chicago Tribune building here. Great place, Billy Goat Tavern. There's the owner, Sam Cianis. No fries, cheaps. Well, why do I bring him up? Because it made me think of Evangelos Venizelos. He's the Greek finance minister who gave one bailout offer, or should I say one haircut offer to private lenders. And said, this is our only offer, kind of like no fries, cheaps. Of course, Commerce Bank and Deutsche Bank and a lot of the banks in Europe, all the big creditors to Greece did take it. So not a big deal in Greece, but you still have rumblings following the financial crisis there. You still have, of course, the worry about growth in China. China's government said it would be okay to live with 7.5% growth. Of course, China's economy was growing closer to 10% for most of the past decade, and had sparked fears when it was going to grow at only 9%. So 7.5% kind of shook out the idea in the world that China may not be there as the growth engine that it's been for the last decade forever. Nonetheless, the FXI, it did slip hard, 2.5%, but the volume on this exchange-traded fund that tracks China was pretty low, meaning there was not a whole lot of conviction in the selling. Same thing for a lot of the big Chinese companies, Ctrip, Baidu.com, a lot of those stocks down, but in very low volume. One worrisome trend for the U.S. stock market is small caps are lagging large caps. Why does this matter? Well, the analogy often described as one of the generals going into war without the soldiers. The smaller stocks are the soldiers. If the generals go into a war without the soldiers backing them up, it's going to be a bad war. But here you have, since the first of the year, the S&P 500 index and the mid caps, the blue, the purple, and the green, and you have the the small caps are the green, and they've gone down from the high. My point being that when you have speculative asset classes leading declines or not going higher, it is usually a bad non-confirmation of a trend, and so that means the SPY, the S&P 500 index, its trend going higher is suspect too. Taking a little break right now, of course. Home builders, one group that has just hung in there very well. Some selling on Monday, but then that turned around to gains by the end of the day in the XHB. This is the ETF that tracks the home building industry. You had Toll Brothers, Meritage, Lennar, all kind of tracking the XHB. Another area you might want to look at is retail. Some stocks have a little touch of the honey badger. They just don't care. CHICO'S was going up today even as there was trouble in China and trouble with the Greek situation. It finished 1.25% higher. Look at CHICO'S. It was a $10 stock from Fort Myers, Florida. They make the stuff for the women, the White House black market stores. Perhaps you've seen those, or there's the CHICO'S name brand stores. $10 stock back right before Christmas. Nice little present there, and that's stocking $15.34 right now. CHICO'S FAS. Earnings are already out. It's just enthusiasm that people are going to be buying more from there. Not a cheap store. Also on Retail Row, look for the Kardashian Sisters, and who doesn't? Well, I guess people who play for the Lakers, maybe not. But in any case, they've designed a line of clothing for Bebe stores, or Baby, or BB, or BEBE is the ticker symbol right here. Nice little move for Bebe from $7 here, first of the year, up to $9. The Kardashian clothes are selling. BEBE could be your friend. BP getting over its troubles in the Gulf of Mexico by settling with Gulf of Mexico fishermen and others who were affected for about $7 billion or so. A little bit better than BP had planned to do. Look at the stock, been going up with oil, $48 a share. You're still getting a 4% yield there. If you can do it morally, it's probably a great thing to buy, a little bit of BP. Oil itself has been creeping higher, of course, from $75 back in October to 110. It's backed off. 106 now, about flat on the day today. So oil, you still have it, of course, oil's tied to China, and if China's not growing as fast, oil won't be going up as much, but oil still has the Iran conflict to deal with.